Welcome, crypto fam, to No. 1 Daily Bitcoin Pod. In today's show, I'll be sharing the latest Bitcoin technical analysis as Bitcoin rallies above 106. But there's three key actions which must happen for new all-time highs price discovery. Also quoting Max Kaiser, I've said many times, money existed before the state. Bitcoin separates money from state. Bitcoin kills the state. Bitcoin is the sovereign individual, and within each sovereign individual resides the true state of self, the state of well-being. All states, central banks, centralized governments will wither and die over the next 10 years. Great leaders will help people prepare for the Bitcoin singularity of 2035. Also in today's show, Bitcoin ETFs surpassed $125 billion, and they achieved that in 1 year, with BlackRock's IBIT ranking 31st worldwide. We'll also be discussing stablecoin volume surpassed Visa and MasterCard combined in 2024, as well as Russia reacts to the Trump tariff threat, BRICS not seeking a dollar alternative. We'll also be discussing the strategic Bitcoin reserve is not only for countries, but also for protocols. Also, breaking news, peer-reviewed paper led by Dr. Murray Rudd shows that Bitcoin is on track to surpass 1 million per coin by January of 2027, with the potential to hit multi-millions by 2030. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. But anyways, fam, if you're new to the stream, important to smash the likes, go ahead, subscribe, then hit that bell icon, turn on all notifications to receive daily premium crypto newsletters every single day, just like this. And happy TGIF. Today is pod episode 1892. That's right, 1892 episodes. I'm your host, JV. It's January 31st, 2025. Yesterday, we recaptured 106,000. According to the TA, we need to get above 106.5. Currently floating just shy of 105. And we do get a monthly close here in a few hours, as it's the final day of the month. So happy Jan 31st, TGIF. Let's get it. But anyways, fam, let's kick it off with our market watch, as we do each and every day. As you can see, pretty little bitty correcting a itty bitty bit, trading just shy of 105. We have Ether up 4%, just shy of 4,000. XRP down 1%, trading just above $3. And yeah, so it's a mixed bag. Some cryptos correcting, some in the red and some in the green. And checking out coinmarketcap.com. Current crypto market cap sits at 3.6 trillion. The Bitcoin market cap did recapture 2.1 trillion yesterday. Today it's 2.074 trillion. We got roughly 107 billion worth of volume for the past 24 hours. And the Bitcoin dominance is on the rise. 57.8%. Ether dominance 11.4%. Checking out top 100 crypto gainers past 24 hours. Lido DAO leading the pack, followed by Floki and Sonic and Pepe and Aave. Which alts, if any, are you bullish on for the bull? Holla. And checking out the crypto bubbles, we get a visual perspective on the day. Safe to say, I'd say like 80% of the market in the green, only 20% correcting it in the red. So the alts are having a bit of a run overall. And checking out on the monthly, we do got some respectable gainers, but the majority correction. And in the red, many of these alts, 20, 30, 40% corrections of the past 30 days. And checking out the Crypto Greed and Fear Index today, we're back in extreme greed, a 76. Note, the higher this number goes in extreme greed, it can hit all the way up to 100. The more likely of a pullback, but we still got some climbing to do here, in my opinion. Yesterday was a 70 greed, last week a 75, and last month a 66 in greed. And checking out the time chain calendar, we're currently on block number 881,656. We have 168,344 blocks until halving 2028. And you currently exchange one fiat monopoly dollar for 954 sats. So stack the sats, put down the gats, and pick up some Bitcoin caps from my man Sergio over at bitcoincaps.net. Let's dive into today's Bitcoin technical analysis, aka astrology for the broskies, right after this epic freeze frame. Headline here reads, Bitcoin rallies above 106, but three key actions must happen for the new all-time highs. And I also want to read you some breaking news and also something very awesome from Max, which is right on point, and then we'll go right back into the TA. I've said many times, money existed before the state. Bitcoin separates money from state. Bitcoin kills the state. Bitcoin is the sovereign individual, and within each sovereign individual resides the true self, the true state of self, the state of well-being. All states, central banks, centralized governments will wither and die over the next 10 years. Great leaders will help people prepare for the Bitcoin singularity of 2035. So shout out to my CNA fam Bitcoin Cafe, great leaders alike who are doing God's work, orange pilling the masses. And if you truly understand what this says, you'll understand why Bitcoin is an enemy of the state and why people like Trump more than likely will never fully embrace it. I'm going to repeat this part one more time. Money existed before the state. Bitcoin separates money from state. Bitcoin kills the state. Hopefully you caught on to that. And also breaking news, Paducah Power keeping the lights on in 22,500 Kentucky homes and businesses since 1961 presents official data to the city commissioners showing lower electricity bills and strong budgeting. Bitcoin mining now makes up nearly 20% of its output and is helping stabilize the energy bills. And if you don't know, now you know. So yeah, anyways, Bitcoin had a strong start to 2025, gaining 13.5% first 30 days of the month. The price movement reflected a complete turnaround in the U.S. government's attitude, becoming more favorable for the sector. However, Bitcoin price has been capped at 105, leading traders to question the reasons behind the apparent stagnation. So we'll dive deeper here. The conditions for a sustained Bitcoin bull run are present, but three factors are preventing a new all-time high. The Trump presidency in the U.S. is increasing opportunities for banks and hedge funds to custody digital assets without affecting the balance sheet. Also, the U.S. Federal Reserve, Jay Powell, the chair, addressed the issue in a press conference for the FOMC meeting, Jan 29th, which was 2 days ago. Powell stated the banks were perfectly able to serve crypto customers, provided they managed the risk, adding that the institution is not against innovation. And yesterday, Jan 30th, the board of Czech National Bank approved a proposal to assess Bitcoin investments as part of the International Reserve Management strategy. They're trying to allocate up to like 7.3 billion into Bitcoin, but it all has to be approved. And the bottom line is it would be roughly up to 5% of the country's 140 billion in euro reserves to Bitcoin, which would be extremely significant. But the key word is they agreed to entertain it. They didn't officially agree to make it happen. So it's being entertained, the proposal at this time. So very exciting times. Also, global economic slowdown, AI bubble, and slow institutional adoption. Some of the other factors, despite favorable new flows, the Bitcoin price was unable to break 106. We roughly touched it yesterday. Therefore, analyzing what's causing investors to act more cautiously is essentially to understanding the time frame for the new Bitcoin all-time high. Traders fear that the global economic slowdown will trigger a flight to quality movement where the market seeks shelter in cash or short-term government bonds. I don't know who in their right mind is excited to be hoarding government bonds or fiat. In fact, those who hoard fiat currency in the banks, what do we call them, folks? Let me know. The U.S. gross domestic product grew 2.3% in the fourth quarter of 2024, slightly below market expectations. And the recent launch of the new low-cost AI chatbot by Chinese startup DeepSeek surprised the industry, somehow crashing the entire financial landscape, including stocks, which is mind-boggling. The Trump administration is defining or definitely dismantling Operation Choke Point 2.0, but that does not mean the banks will start embracing Bitcoin immediately. There needs to be clearer accounting and risk calculation rules, and perhaps the approval of in-kind ETFs, which would allow more integration with traditional markets. My understanding there is you can put in Bitcoin and therefore potentially even remove your Bitcoin and still have Bitcoin. Whereas right now, all the ETFs in the United States, it's not that. You have to actually, if you want to invest Bitcoin, you need to sell your Bitcoin and then put the cash into the ETF. And then you have the cash equivalent in Bitcoin, because therefore Bitcoin ETF is not not true Bitcoin. There's only one true Bitcoin. That's self-custody Bitcoin because it can't be confiscated. There's no third party intermediary, etc. So there's an advantage there. And no other Bitcoin is the same compared to self-custody Bitcoin. Keeping your Bitcoin on the exchange, not your keys, not your cheese. Putting Bitcoin into an ETF, there's nothing to do with Bitcoin. You're just riding the fiat wave and you're getting the fiat equivalent, returned to you. And you're just using Bitcoin as the vehicle, but it's not the same. So I just want to be clear on that for those who don't know. Also, one other thing you should know in case you don't know and you're new. One Bitcoin can be divided by 100 million Satoshis, which are sats. And you can purchase literally any amount of Bitcoin you choose. It can be $1 worth. It can be $5 worth, $100 worth, $500 worth, $1,000 worth, $10,000 worth, $100,000 worth, $1 million worth, $1 billion worth. Ask Michael Saylor how he does that one. And anything's possible with the Biddy, and that's the beauty. A little astrology for the broskies, holding it down. You should be able to see live and on your screen here. This is the 1 hour chart. Big green candle earlier, which is nice. Then we've had some corrective reds, as you can see. Zooming out from the 1 hour, take a quick look at a 4 hour chart. And yes, this is live and in the flesh, live chart action Jackson. And you can see there's a green target on the 4 hour sitting at $130,000. And from the 4 hour, check out the daily chart. And as you can see, green candles have been forming past couple of days, which is awesome. And we're forming a green candle thus far for today, the final day of the month. And zooming out from the daily, take a quick look at the weekly. We still have the sexy cup and handle target, which has been here for months, sitting at 124,000. I believe this is in play sometime Q1. I like to believe it'll happen in February. Let me know your thoughts. And you can see we've had 3 green consecutive weekly candle closes, which is epic. And zooming out from the weekly, get a quick glance of the monthly. And as you can see, it's going up forever, Laura. We are forming a nice green candle close here. So things are looking on the up and up here for January. Last month, December, itty bitty corrective red. That's after having the most bullish candle close in history for the month of November. We rose almost 30,000 in a 30-day or 31. I don't know how many days there were last that month, but nonetheless, 30 or 31 days, which was a new record. So if you don't know, now you know, broskies. But anyways, keep the comments flowing, crypto fam. Let's dive into some of the news. Now we got the TA out of the way. 125 billion worth of Bitcoin ETFs. That's insane, considering it's only been a month. The U.S. spot ETFs have crossed a significant milestone, showcasing growing institutional adoption for the Biddy. Collectively, the spot Bitcoin ETFs surpassed 125 billion in holdings January 30th, accounting for over 6% of the current Bitcoin supply. So 6% of the Bitcoin supply is from the Bitcoin ETFs. And who's the primary custodian there? Coinbase. The milestone comes just over a year after they first debuted trading Jan 11th, which was last year. The spot Bitcoin ETFs amassed 4.2 billion worth of inflows from January 1st to the 24th alone, accounting for over 6% of all the ETF inflows, according to Eric Balchunas, senior ETF analyst at Bloomberg, who quoted saying here, the spot Bitcoin ETFs quietly on fire to start the year with 4.2 billion in flows, which is 6% of all the ETF flows. For context, they just passed ESG ETFs and assets, 117 billion, and have about the same as the gold spot. Now, the gold spot ETF has been around for 2 decades. Just to put that into comparison, what Bitcoin has achieved in the past year. Bitcoin has achieved in 1 year what took gold 20 years via the ETF to achieve. ETF investments were a significant element in Bitcoin's 2024 price rally, accounting for roughly 75% of new investments when it recaptured the 50,000 mark February 15th, less than a month after the ETF debut. BlackRock, the world's largest asset manager, controls the largest Bitcoin ETF by assets under management, worth over 58 billion. The fund accounts for over 46% of the market share amongst all the U.S. Bitcoin ETFs. So virtually half of all the ETF volume is coming from BlackRock. BlackRock's fund grew to become the world's 31st largest ETF amongst all ETFs, including crypto and traditional finance products, according to data from Verify, as you can see here. BlackRock's ETF amassed over 321 million worth of Bitcoin Jan 30th, accounting for over 54% of the day's 588 million cumulative net inflows. Despite concerns over a short-term dip to 96, many analysts believe Bitcoin's trajectory remains optimistic for the rest of the year. The growing Bitcoin ETF milestones and BlackRock's growing fund may propel Bitcoin to 200,000 during 2025, according to Ryan Lee. And I'd say that's extremely bearish, but nonetheless, we all know 200 is a given. Quoting him here, long-term projections suggest sustained growth, with some forecasts placing Bitcoin's value at 200,000 by 2025. Let me know if you agree or disagree. Next story of the day, we'll discuss the latest with the stablecoins. Their volume surpassed Visa and MasterCard combined in 2024. And that was last year, broskies. Stablecoins, which play a major role in the global crypto ecosystem, saw massive adoption in 2024, with their transfer volumes beating those of Visa and MasterCard combined. Old school legacy payment rails, move aside. There's a new biddy in town. The annual stablecoin transfer volume reached 27.6 trillion last year, surpassing the combined volumes of Visa and MasterCard by 7.7%, according to a January 31st report by CEX.io. One of the major catalysts amplifying the stablecoin transfer volume has been the increased use of bots, especially on Solana and Base. CEX.io led analysts shared Tether's USDT, the world's largest stablecoin by market cap, accounted for roughly 80% of stablecoin trading volume on average. That's a win. Strengthening its position amid surging stablecoin reserves on centralized exchanges. Stablecoin supply saw a significant surge of 59% in 2024, reaching 1% of the US dollar supply. Despite beating Visa and MasterCard in volume, stablecoins lost 13.5% in share within the total market cap. The market share drop mainly occurred in the third quarter of 2024 amid decreased activity in the broader crypto market. Quoting their analysts here, stablecoins experienced a surge in both supply and volume following the post-election spike in crypto activity, surpassing Visa and MasterCard by over 2 and 3 times, respectively, in Q4 alone. And also, trading bot activity comprised a massive share of the stablecoin transaction volume last year, and they estimated to account for 70%. Jeez Louise. On Solana and Base, the bot transactions accounted for 98% of the volume. That's not good. High bot activity within the network doesn't necessarily mean worse transfer volume. Adding that bots are often used to improve market efficiency through arbitrage and cover gas fees by paymasters. Sounds like to me it's manipulation, but hey, what do I know? Bots can be used for harmful practices like front running. That's what I'm talking about. Sandwich attacks. Who doesn't want a sandwich? And pump and dump schemes. Who doesn't love a good pump and dump? And snipping or sniping liquidity pools. Not a good look to be a sniper, but still the bot dominance in stablecoins could also represent the maturation of certain networks. I mean, to each their own. Ethereum and Tron continue to dominate as the primary networks for stablecoins of 2024, accounting for more than 83% of the market by the end of the year. At the same time, their combined share fell from 90% at the beginning of the year, pointing to the ongoing diversification across other networks such as Solana, Arbitrum, Base, and Aptos. Quoting the analyst here, this shift was particularly pronounced for Tron, which saw its market share decline significantly from 38% to 29%. The Ethereum stablecoin market cap surged by 65% last year, reaching a new all-time high. This growth was partly driven by the reduction of transaction fees following the DCON upgrade in March, as well as post-election optimism for the United States. And there you have it. Crypto bros, let me know how many of you actively use stablecoins and what is your stablecoin go-to. For me, it's Tether USDT. Personally, I don't really trust any of the other stablecoins, but that's just me. Headline reads, Russia reacts to Trump's tariff threat. BRICS not seeking a dollar alternative. So here we go. Russia countered U.S. President Trump's tariff threat against BRICS while claiming the group has no intention to dethrone the U.S. dollar. BRICS, as you know, the group of emergent economies, including Brazil, Russia, India, China, and South Africa, does not plan to create a new common currency to replace the dollar. Kremlin spokesperson Dmitry said, according to the January 31st report by Reuters, the point is that BRICS is not talking about creating a common currency, nor has it ever done so. Instead, the international group is is seeking to create new joint investment platforms that allow mutual investment in developing countries. Founded in '09, BRICS has economic cooperation between its member countries as one of the key objectives. Since at least 2023, member countries like Brazil have pushed the concept of a common currency for trade and investment among the group to reduce their vulnerability to dollar exchange fluctuations. In October 2024, BRICS members reportedly discussed a potential BRICS currency with proposals including a gold-backed currency known as the unit. Unit. The project has been seen as a potential cross-border settlement tool for a potential digital currency, purportedly posing a threat to the dollar supremacy as a global reserve currency. On Jan 30th, Trump declared that a potential BRICS currency is unacceptable for the U.S., threatening with 100% tariffs. Hey now, the idea that the BRICS countries are trying to move away from the dollar while we stand by and watch is over. There is no chance that the BRICS will replace the US dollar in international trade or anywhere else, and any country that tries should say hello to tariffs and goodbye to America. Trump's latest tariff threat is not the first time he made such statements. Referring to similar threats made in 2024, there have been statements like this before, back when he was just president-elect. In all likelihood, U.S. experts probably need to explain the BRICS agenda in more detail to Trump. Now, is Trump likely to threaten CBDCs? Well, you do know he just recently signed the executive order that there are no CBDCs in the United States. However, my thinking from here, just, connecting the dots, I think they're going to end up using some stable coin or create some stable coin out of thin air and use that as their CBDC protocol. Hence, it's not exactly a CBDC. It's not a central bank digital currency. It'll be a stable coin, but one and the same. It's a programmable digital dollar, which is virtually what a stable coin does anyways. But I digress. Let me know your thoughts, fam. JV is right. Love the rant. Thank you, Shortcoin. Christine Lagarde needs to get the shine box and take it over. Exactly, broskies. This is actually quite interesting. Let me pull it up first for you. Strategic Bitcoin reserve, not only for countries, but also for protocols. Fascinating. Let's break this down. Bitcoin's status as a store of value is now firmly established with a market cap of 1 trillion plus for the past year and more than 110 billion held in exchanges, or the ETFs that is, that have converted many skeptics and vindicated diamond-handed Bitcoin hodlers. Bitcoin's strength also fueled discussions of the strategic Bitcoin reserve worldwide in the US and in major countries, including Germany, Russia, Brazil. We also discussed the other day breaking news of the Czech Republic, central bank governor proposing a $7.3 billion Bitcoin purchase for a strategic reserve. And also layer one blockchains are having Bitcoin as part of their treasury, as they are typically on the bleeding edge of adoption, ironically at risk of being front run by traditional nation states and corporations and having strategic Bitcoin reserves. Game theory backs it all. I mean, Max Kaiser actually coined the phrase the global hash wars, and that's precisely what is playing out on a nation state level. It's not crypto within the game theory. The fun here is that nation state strategic Bitcoin reserves are inevitable. The more the U.S. debates and evaluates strategic Bitcoin reserve, the more seriously other nations must take the idea of the U.S. strategic Bitcoin reserve, which in turn means other nations start accumulating BITI first on the non-zero chance that the U.S. adopts a strategic Bitcoin reserve. This is where the game theory comes in. If other nations wait for the U.S. strategic Bitcoin reserve first, then it will be too late, as the price of Bitcoin will have already risen astronomically given the amount of the BITI needed to be meaningful in the U.S. It's better for other nations to start accumulating a small amount of Bitcoin first as the U.S. adopts strategic Bitcoin reserve. This is true for all the other countries besides the U.S. and creates high stakes game of international FOMO like a mofo. So yeah, El Salvador's adoption of Bitcoin as a legal tender led to gross domestic product growth, a 95% tourism surge, increased foreign investment, and streamlined remittances, and repositioned the nation in the financial world. Overall, it is a widely successful case to study the strategic Bitcoin reserve. Also, Brazil and Japan are both considering Bitcoin reserves, while China and Russia, despite being publicly anti-crypto, reportedly have private change of heart. Waiting for U.S. action may prove too costly for policymakers in these vast economies. Should nations need a more significant case study. They need only look at the corporate sector led by visionaries like Saylor. Saylor proved Bitcoin to be desirable deflationary treasury asset and pioneered the innovative template for the institutional Bitcoin adoption. We call that the Saylor put. And ultimately, the strategic Bitcoin reserves offer a unique opportunity to address one of the most pressing challenges faced by the U.S., its mounting national debt. By accumulating Bitcoin at scale and leveraging its deflationary store of value properties, the U.S. can solve the coming debt crisis and regain its status as a leader in crypto innovation. But there you have it, yo. Let me know your thoughts on that. Now for our feature story of the day. Breaking news. Peer-reviewed paper led by Dr. Murray Rudd shows that Bitcoin's on track to surpass 1 million per coin by January 2027, with the potential to hit multi-millions of dollars by 2030. And here's actually a post shared by Dennis Porter sharing this actual peer-reviewed paper, and I'll read you some of the highlights, and we will discuss this, and we will discuss Bitcoin hitting $1 million. As you know, my personal bull target for this cycle, which is for this year, 2025, is $1.1 million. That's my bull scenario based upon mass adoption from the United States, the stockpile making the executive order to purchase the million Bitcoin, which Cynthia Lummis proposed, and then other nations following in their footsteps as the global hash wars continue, in which was predicted from Max Kaiser. Max is calling for 2.2 million in play. If you missed my podcast yesterday, that was the featured story. We discussed why Max believes we'll likely hit 2.2 million per coin and what catalyst would send us to such an extreme price appreciation, which is ultimately like a 22x from where we're currently at. But anyways, let me read you some of this supply and demand framework for the Bitcoin price forecasting. And I also have the actual entire report, like the entire study pulled up here too, but it's probably very long. So I'm just going to read you some of what I see here, and bear with me, and then we'll discuss it. And you let me know your thoughts. Do you think we can hit $1 million per coin potentially this cycle, whether this year or in the next couple of years as predicted here? Do let me know. But I'm going to start here, and I'm just going to read this out loud and shout out Dr. Murray Rudd, who actually produced this along with Dennis Porter of the Satoshi Act in helping usher in nation state adoption. And he's also doing so at the state level. So he's all about helping, the strategic Bitcoin reserve, whether from the nation state level or, the individual state level. So here we go. Supply and demand framework for Bitcoin price forecasting. See if I click on it. Actually, it'll be easier to read this way. We developed a flexible supply and demand equilibrium framework, and I'm just reading it to you, the report, that can be used to develop the pricing models to forecast Bitcoin's price trajectory based on its fixed, inelastic supply and evolving demand dynamics. This approach integrates Bitcoin's unique monetary attributes with demand drivers such as the institutional adoption and long-term holding patterns. Using the April 2024 halving as a baseline, we explore model scenarios with varying assumptions about growth and adoption and supply-side constraints, calibrated to real-world data. Our findings indicate that institutional and sovereign accumulation can significantly influence price trajectories, with increasing demand intensifying the impact of Bitcoin's constrained liquidity. Forecasts suggest the modest withdrawals from the liquid supply to strategic reserves can lead to substantial price appreciation over the medium term. While higher withdrawal levels may introduce volatility due to supply scarcity, these results highlight Bitcoin's potential as a long-term investment and underline the importance of integrating economic fundamentals into forward-thinking portfolio strategies. Our framework provides flexibility for testing different market scenarios, demand curve function forms, and parameters, offering a tool for investors and policymakers considering Bitcoin's role as a strategic asset. By advancing a fundamental-based approach, this study contributes to the broader understanding of how the Bitcoin supply-demand dynamics influence the market behavior. The keywords: Bitcoin, inelastic supply, economic modeling, inelastic supply and institutional adoption, price forecast, strategic reserve. And here's a bit of an intro. I'll just read this to you, and then we'll discuss it. Introduction: unlike fiat currencies, which are susceptible to inflationary debasement pressures, Bitcoin's immutable 21 million coin supply and independence from the central bank position is a decentralized, independent, enduring, unique store of value. This may offer investors a tool to mitigate systemic risks arising from inflation, government overspending, and unsound monetary policy, and has important implications for portfolio allocation decisions. While Bitcoin also serves other purposes, acting as a speculative investment and through layer 2 innovation such as the Lightning Network, a medium of exchange and recent influx of institutional investors, and low movement in coins held by long-term investors, imply the increasing importance of Bitcoin's role as a global store of value. And actually going to the website to open this up, let me scroll and just see if there's anything in particular. So the segments are, there's the introduction, which I just read the intro of the intro. There's the background. Then there's the Bitcoin liquid supply. There's the modeling options, I guess talking about stock to flow, as well as energy-based valuation models. Also discusses macroeconomic models, the network models. So this is a very detailed report. Also, it shows you the power law models here, which we cover from time to time on the show, quantitative statistical models, supply-demand equilibrium models, the methodology for the framework and context, Bitcoin supply curve, and as you can see here. So again, very detailed report. I don't have time to really read all this to you, but I will link to it in the description in the show notes. So make sure you guys check it out, and shout out Dennis Porter, and let me know, fam, what are your thoughts surrounding this model suggesting $1 million per coin by January of 2027 with the potential to hit multi-millions by 2030. In 8 more days is the 100K Bitcoin Fiesta. And let me make sure I'm actually sharing my screen. That might be helpful. So 8 days away, we're going to be celebrating Biddy vibes, oceanfront style, here in Puerto Rico at the Condado Ocean Club in Condado, San Juan, Puerto Rico. And there's literally only 2 tickets left, so hence why this is the last call. So that's why I'm making it a point to share this with you right now. So as you can see, there's 2 tickets remaining. Basically, the event begins February 8th at 8 p.m. It ends at midnight, so it's about a 4-hour celebration. We will have a live DJ, photographer, and food will be included, and drinks are included. $197. We have 2 tickets left. It's virtually almost sold out here. General admission ticket includes entry into the 100K Bitcoin Fiesta on Saturday, and also includes food and drinks. General admission couple tickets are sold out because we don't have many tickets left. VIP tickets officially sold out sometime last night or this morning. Someone copped the last ticket, so they're gone. VIP day, the difference between VIP and general admission is just one factor, is a VIP bonus day, which is February 9th on Sunday. We're doing a all-inclusive boat snorkel tour out of Fajardo. It's going to be awesome. Looking forward to that. But nonetheless, there's no more tickets available for the VIP. VIP couple tickets are sold out. So all tickets are sold out minus 2 general admission tickets still available. So if you're interested in joining us, 100k.cryptonewsalerts.net. Also have the link pinned in the comments section of the stream. But take advantage of it if you're planning on attending, because obviously these 2 final tickets will most likely be sold out by the end of the day. So I highly recommend, if you're joining us, to take advantage of it. All the details are on the Eventbrite page here, as you can see. So I'm not going to read it all for you, but we do have frequently asked questions, and including recommended hotels and all the details, all the deets that you do need to know.